Hey everybody, this is Ray and Andrew with REH CPAs. Today we want to talk about ERC. ERC is what's known as the Employee Retention Credit. This was a program that was introduced during COVID to help employers to maintain their payrolls and also to make up some lost revenue due to COVID shutdowns. The reason why I wanted to talk to you about today is some of the things that we're seeing in the marketplace, some concerns. We're seeing these what's known as ERC mills popping up. What they do is they contact small business owners either via telemarketing, via email. They're even doing television commercials from what we've seen. And the problem that we're seeing is that the good thing is they're notifying people the availability of the ERC. The bad thing that we're seeing is that they are convincing people that they're qualified when they really shouldn't be. And it's become such a problem that the IRS has actually come out with a bulletin warning small business owners to be aware of these ERC mills. So Andrew and I have been running into these issues with clients that have been dealing with these type of ERC mills. And I wanted Andrew to go over some of the misconceptions that they're convincing small business owners to qualify when they really don't. And it's going to become a huge problem. The IRS has already started their audits, and we're going to see a lot of audits when it comes to this. But Andrew, can you go over some of the misconceptions that we're seeing from these ERC mills?
So the first big misconception that we're seeing around the ERC is that people think they qualify, business owners think they qualify because they had supply chain issues. And the reality is it's just not that simple. Every business owner in America could argue that they had supply chain issues during the pandemic, during COVID.
There were a lot of things going on that weren't related to COVID shutdowns.
Right, but having supply chain issues does not automatically qualify you for the ERC. There's just more to it than that. So if you're being told that you qualify for the ERC because you had supply chain issues, just understand that it's more complicated.
You need to dig a little bit deeper. Like, how was your supply chain disrupted? Did you have a vendor that was shut down due to COVID orders and that you couldn't find that product somewhere else? I mean, you're really going to have detailed explanation to how your supply chain was disrupted due to shutdown orders. It's not that just somebody was running out of product and you couldn't get it.
Right.
That's not going to cut it.
That doesn't work.
So you really going to have to dig deep. So with these ERC mills, if they tell you, oh, you just had supply chain disruptions, you really need to make them dig deeper and provide you with the detail and the evidence, because I can guarantee you at the end of the day, the IRS is going to come to you for that detail, and you better have it. So.
For sure. So then the other big misconception that we're seeing is that people are being told that because your ability to travel, your ability to go meet clients and do some other things that you may have to do to carry on your business, because of that travel limitations were put into place, that now you qualify for the ERC. And again, it's just more complicated than that, because information has come out now that if you were able, say you were shut down and couldn't travel, but you were able to do teleconferences, Zoom calls, have employees work from home, video conferencing, just things like that. If you were still able to do that stuff, yes, you couldn't travel, but if you were still able to do that stuff and still get the job done, meet the client's needs and do what was needed to run your business, then again, you don't qualify for the ERC. Yes, your process changed, but you were still able to get the work done at the same level. So that is not an automatic qualifier for the ERC either. Being limited on travel, but you still were able to get the work done other different avenues, that's not a qualifier for the ERC either. So. Beware of that. Beware of that issue. The other big thing we're seeing a lot is people not understanding that the ERC creates taxable income. They're being approached saying that they can get free money, tax-free money, and it really just sounds too good to be true. So understand that the ERC, it's a little deceptive, because if you apply for the ERC credit, you receive the income. The receipt of that income, receiving those funds, it is not taxable. That is a tax-free event. But you also cannot deduct the wages that you used to claim the ERC credit. So the ERC, it's a payroll credit. So to to get the credit, you have to figure out how much wages you paid. So you use those wages that you paid to go qualify for the credit. But the reality is you can't use those wages to qualify for the credit and then also take a tax deduction for those wages. That's like a double dipping effect there. So if you have filed your 2020 and 2021 business and individual tax return and you go and get the ERC credit for 2020 and 2021 tomorrow, and when you receive those funds, like you need to make sure that you go back and amend those returns to remove those wages.
Yeah, and just to be clear, so if you've got $100,000 in ERC, you need to go reduce the amount of deductions you took in wages for that ERC by $100,000. So in effect, it's going to increase your taxable income by $100,000.
It is. So again, it's a little deceiving because no, the ERC money isn't taxable, but you also can't deduct the expenses anymore.
Right,
either.
and that's what we're seeing with some of these ERC mills. They kind of just see this is non-taxable money, and they kind of just stop there. They don't really understand the tax implications of how you have to exclude the wages that you use to get the credit from your deductions, which increases your taxable net income.
Correct. You got to keep unpacking this a little bit more.
Right. So, you know, the ERC is incredibly complex. You've got all these pop-up, so these ERC mills, they smell money because they charge a hefty fee to go out there and get these credits for you. We're seeing upwards of 20% of the actual credit. So they are definitely incentivized to get you qualified and to convince you that you're qualified. And you know what's going to happen is that they're going to get you qualified, you're going to get your money, then they're going to disappear. You know, these companies, they're fly by night, a lot of them. And once the IRS starts auditing and their liabilities start piling up because you start going back to them, wanting your fees back and wanting penalties and interest, they're just going to close up shop and disappear, and you're going to be left holding the bag. So definitely be careful whenever you go with one of these companies to get your ERC. Andrew, what else can they do to make sure that they make sure that they do qualify for these?
I mean, the first thing is really just give us a call. Like, we've been working with our clients on their ERC questions and consulting, determining if they're eligible for, why we think they're eligible for it, why we think they aren't eligible for it, and we're also experts in doing the calculation as well. It's a complicated credit, it's a complicated calculation. It's not a slam dunk easy thing type to do.
Especially if you receive PPP. So if you also receive PPP and you're trying to get the ERC as well, you have to take the PPP into account, and some of them are missing that as well. So
yeah, so we're happy to look at your situation, give you our thoughts before you start paying any large fees to any company. If someone approaches you and you haven't been approached by us yet already, I know we've been approaching a lot of our clients proactively already, but if you're wondering about your ERC eligibility, definitely give us a call and we can give you our professional recommendation on how you should move forward.
Awesome. Thanks, Andrew.